Howdy there, folks. Welcome into today's video. I sold 2 stocks. We're going to speak about what stocks I sold. We're going to talk about where I put that money, why I did it, those sorts of things. Obviously, tough decisions whenever you're selling a stock. It's much easier decisions, in my opinion, always to buy a stock. And the reason being is there's always a lot of opportunities out there to buy stocks. Whenever you're selling stocks in your portfolio, I think it's a very tough decision. So we'll speak about that. We'll talk about the moves I made there. I'll show you what I was up to. Also going to talk about 2 stocks that reported earnings that I want to just share with you my thoughts on those 2 earnings. One is Fubo, one is Corsair Gaming. We'll speak about that. Market obviously dropped substantially. Dow dropped, I believe it was over 500 points from where it was trading at today to kind of the bottom. Speak about that. A few other subjects, so appreciate everybody joining me as always. I'm feeling a little bit better here today, certainly than yesterday. I do have more energy today. I would say probably tomorrow I'll be back to about 100%. So thank you everybody that's joining me even when I'm not feeling the best. 2 things to access down as a pinned comment in description area. One is I put a free workshop together for you guys when I was feeling 100% a few nights ago, and that should help you guys out. It's about a 28 to 30 minute video. Make sure you access that when this video is over here today. And then the second thing is I made moves in my Patreon portfolio today. If you haven't joined in the Patreon, definitely make sure you do that. Today, I not only made some buys in there, but I actually made some pretty big hedging decisions in that portfolio. I bought some put options on a stock here today. So if you want to see exactly what I'm up to in the Patreon portfolio each and every week, then definitely join us in there. That's going to be the pinned comment down there as well. Okay. Alrighty. So where I actually want to start out today's video is, I was looking at kind of like year-to-date returns for the public account, and it's been tremendous, right? Fidelity Investments has a 78.5% return year-to-date as of July 31st, right? That's almost a 4x of the S&P 500. That's ridiculous, right? It's one thing to outperform the S&P 500 a little bit. It's one thing to just absolutely cremate it. I mean, this isn't even like a close competition. This is like Usain Bolt racing a baby or something like that, right? And obviously, if you compare us against bond indexes, it's almost laughable, right? But the thing I think is important when it comes to a year-to-date like that, right, is I think about last year, right? And I think about how vicious last year was. And the way I think about this is sometimes in the stock market, you're going to go through some really, really tough times. You're going to go through some time periods that makes you question yourself and your decision making. It's going to make you question a lot of things, right? And there's one of 2 places you can go with that. And I take myself to one of 2 places whenever I go through a tough time in the stock market, which I've been through probably 2 or 3 time periods in the past 15 years that really made me question like what I'm up to, everything I'm doing, and ultimately made me a better investor, okay? You can go one of 2 ways. The first way is you can throw in the cards and say, damn it, I give up on this game. I can't do this, okay? The other is you can work a lot harder and you can say, here's where my pitfalls are. Here's what I've done really well. Let me double down on what goes really well for me and what I do very well. Let me stay away from these things that are pitfalls of mine, and let me work a heck of a lot harder. I decided to obviously go the other way, right? I decided to go the way of let's work a lot harder. Let's stay away from stuff that we know gets us in trouble, and let's go after things that we know we are in our circle of competence that we're going to have a high probability of succeeding at, right? And that's exactly what I've done, and obviously the results speak for themselves since I've made some pretty big changes, like substantial changes, right? And so just remember you're going to go through tough times in the market as a stock picker, and you're going to go one of those 2 ways, and it's really up for you to choose where to go, right? And coming from the sports world, I always remember there's always tremendous stories about, different people. I was watching the Hall of Fame game last night as a horrible preseason game. But anyways, this is in regards to players that are going in the NFL Hall of Fame, okay? And they're talking to this one guy who's going into the Hall of Fame. He's being inducted in the Hall of Fame, right? And this guy he was basically a truck driver, right? And he tried, to make it as on this kind of wannabe NFL type situation, just kept playing football and then finally got a chance with an NFL team. Guys are getting inducted into the Hall of Fame tomorrow. This is insane. He's one of the greatest football players in the history of football players, and the guy was, a truck driver, and somehow he just kept with it, stayed with it, and focused on getting better and better. And next thing you know, he's in the Hall of Fame. It's incredible, right? And so that's life for you. You're either going to quit, you're going to say, the hell with this, I can't make it, or you're going to go the other way and you're going to say, I'm going to work twice as hard, triple as hard, 4 times as hard. I'm going to learn from my mistakes. I'm going to become a better whatever I'm becoming, and I'm going to see the results of that, right? And the results speak for themselves. And in regards to this portfolio, here's the 4 main stocks I hold in the public account, right? It's Meta, it's Tesla, it's Amazon, it's Elf, right? These are very volatile stocks. So they're going to go through big ups and big downs. And we saw last year them go through big downs. We see this year obviously go through big ups, right? Well, except Elf. I mean, Elf's pretty much only ups. It's just, I mean, that company is a whole different animal, okay? They're only ups. That's the only stock I probably hold that it's only gets good and better and better and better, okay? But nonetheless, folks, when you hold these sorts of stocks, you're going to go through some major ups and major downs, and that's just the way it is. And so you just have to come to that conclusion of like it's gonna be a roller coaster ride. It's gonna be bumpy from time to time. And you even look at some positions I have that are pretty big positions that are the smaller positions in that portfolio. Even a Palantir, for instance. A Palantir is an up and down stock. Palantir's earnings are Monday. This is a stock that at this time next week is probably gonna be anywhere between $15 a share and $27 a share. Literally, at this time next week, Palantir will likely be somewhere between 15 and 27, and it all depends on where those earnings come out and where that guidance comes out, if they give any guidance as far as that goes. That's a wide range, but that speaks to how volatile a stock like Palantir is. That stock's going to move, 10, 20, 30% easily next week throughout the trading week. It's going to be intense. And so, when you hold some of those sorts of stocks, you just got to understand you're going to go through some big ups and big downs, right? Now, the Dow Jones Industrial Average, it fell off a cliff here today. I mean, this baby, everything was looking good, and people are wondering what the heck happened here. I'll explain to you exactly what happened, okay? So, the July jobs report ended up coming out, right? U.S. payroll growth expected 187. That's lower than expected. Now, the issue with this is, in regards to the jobs report, we're almost in kind of like a no-win situation when it comes to jobs report. Because here's the deal. If jobs report comes in too good, that used to never be a thing, by the way. It was like, there's no such thing as too good. Now, if it comes in too good, people would say, oh, inflation's going to be a problem. We're going to have wage price spiral situation. And ultimately, that means the Fed has to continue to raise rates a lot longer, a lot higher than they are. And everybody gets all bent out of shape in regards to that, right? On the flip side, if the jobs report comes in worse than expected, lower than expected, then everybody says, oh my gosh, maybe a recession's coming. That's not good. That's not good for earnings. That's not good for companies. That's not good for anybody, right? So unfortunately, every time this jobs report comes out, it just feels like there's a no-win situation. It's either going to be too good and the Fed's going to have to keep raising rates, or it's going to be not good enough, and that means recession. And so the market's going to draw whatever conclusions it wants to draw. It just feels like right now when it comes to this damn jobs report, it feels like we're in a place of no winning in regards to that specific thing, right? Now, in regards to inflation and all inflation fears, I don't even know why, we still have any crazy inflation fears at this point in time. The next CPI is almost guaranteed to be in the twos, right? The last one was at 3%. In this one, this entire month, Truflation's pretty much had us in low twos. We should be in the twos. It's just a question of, are we 2.9, 2.8, 2.7, 2.5, 2.2? Like, what are we in regards to that, right? So there's always a potential of reinflation at the very end of this year or in 2024. But as of right now, at least, it seems like inflation is definitely being kind of put to bed. And so, but I think we're going to continue to worry about inflation. Even if it's not a problem, people are going to worry about it. And the reason being is just investors are scared. Why are they scared? Because of what happened last year, inflation went way higher than almost anybody anticipated and stayed way higher than anybody anticipated, right? When you have a situation like that, it scars people, it scars investors for years to go in the future. This happened coming out of the great financial crisis. If you don't know, I started in the great financial crisis in terms of my investing journey, right? And I watched investor after investor go on CNBC for the next year and a half, 2 years later, talking about, guess what? Double dip recession. We're going to have a double dip recession. And there was so much fear for the next year and a half to 2 years. After the market had already bottomed in March of 2009, there was so much fear for a long time because investors were scarred. People were scared. They just went through the great financial crisis. A horrible, deep, dark recession that was ugly, right? Where the market indexes fell 50+% peak to trough, where countless stocks fell 50, 60, 70% peak to trough. You had a lot of bankruptcies, you had the housing crisis, you had all that simultaneously. It scarred people for years until we finally got out of that. And then I stopped finally hearing about that around 2012. That's how long it took. So just understand, you're going to be hearing about people being scared of inflation for at least another year, if not 2 years to go into the future. So just understand, in terms of hearing about it, it's not going away, okay? Now, Fubo earnings, okay? Fubo, and then we'll talk about what I'm planning on doing with Fubo stock, okay? So Fubo, up 41% in terms of revenue. Total operating expenses only up 17%. So it looks like this number in terms of revenue should flip the operating expenses, meaning, should start gaining more in revenue, becomes a bigger number than operating expenses, which is exactly what we need to see, because that's going to obviously start to flip the profitability profile of the company, right? Now, they're making great progress in terms of bringing their losses down, but they're still losing money. So that is an important factor, and that's what makes Fubo a risky stock, right? They've made tremendous progress in terms of net loss margin, but still net loss margin, not net profit margin, right? Adjusted EBITDA, they've made incredible progress in regards to that, but they still haven't flipped that baby yet, right? Subscribers up 23% year over year. Obviously, we're about to go into football season, and so their subscriber numbers should jump immensely over the next, I would say, at least 2 quarters. ARPU is only up 13%. I thought that number could have been higher, in my personal opinion. That's average revenue per user. So they're in their advertising business, in my opinion, slacking. I think they only grew at 5% year-over-year basis. That needs to be growing a lot faster than that. So they have a lot of room to make up for in terms of their advertising business and the growth rates there. We should see much better numbers in future quarters, in my opinion, in regards to that. So in regards to Fubo, the story is definitely getting a lot more appealing. It's no guaranteed story. Well, no stock's no guaranteed story, right? But it's no guaranteed story as of yet, because they're still losing money. The losses are being cut way down. They should get these losses cut down even further next quarter and the following quarter. And so, we could be looking at a cash flow positive situation. They've been talking about 2025. It's possible in 2024. Maybe they're ahead of schedule. A lot of it's going to come down to what their subscriber numbers are looking like, especially over football season, and a lot's going to come down to what their advertising business is looking like. So we'll speak about what I'm up to in regards to stock in just a moment. In regards to Corsair Gaming's earnings, what in the heck happened to my camera? Okay. Oh, look at that. Look at that. We're just going to switch? We're just going to switch? We're going to switch? You want me to talk to this camera? You want me to talk to you then? Come on, man. What are we doing here? Ay. Am I going to have to go over there now? Seriously? Am I going to really have to go over there? Oh, my goodness. Goodness. Technical difficulties. I don't know if I have the energy to put up with this stuff right now, but whatever. We'll do it. We'll make it happen. It is what it is. All right. So, Corsair Gaming. Net revenues definitely headed in the right direction. That's great to see, certainly, right? Did I get taller, or is my camera off a little bit? Because I'm like, what in the world's going on here? Maybe I grew? Maybe that's why I got sick. I was growing. Oh my gosh. Who would have thought it? So Corsair revenues obviously up substantially on a year-over-year basis, 283. They did the same quarter last year. They did 325. That's good to see. Gross profit is exploding higher. That's definitely great to see, from 36 million the same quarter last year to 82. Next few quarters should be very fun in regards to gross profit. Company still has an operating loss. Obviously, they made tremendous progress from almost a $55 million operating loss last year in the same quarter, now $2.7 million. So they've almost flipped that. That's good. Net loss, they were losing almost about $52 million in the same quarter last year. Now they're losing about $4 million. So great progress in regards to Corsair, but this is a company that should be profitable pretty much quarter in and quarter out. That's what I need to see from a Corsair Gaming. So in my opinion, they still got, room to fix the business and get in a better place, in my personal opinion. In regards to Corsair Gaming stock, it's pretty much just a hold for me right now. I'm expecting this company to really be profitable quarter in and quarter out. I don't like to see, you can make an argument maybe the quarter after Christmas, maybe that could be a weaker quarter, but this is a business that should just be putting up great numbers, in my opinion, quarter after quarter. I'm not just talking about revenue, I'm talking about profitability-wise. So for me, I'm just holding the stock now. I need one of two things to either happen. I need the stock price to go down substantially for me to start buying more, or I need a situation with Corsair where I just start seeing them execute even on a higher level, right? This is great progress. I don't want to diminish that progress. It's just like, it could be a lot better. It could be a lot better, right? Now, in regards to Fubo, okay, Fubo's a tough one for me, right? Because the stock is obviously very low priced, and the upside potential in Fubo is ridiculous, like insane ridiculous. Like, there's probably, it's certainly one of the riskiest stocks I hold, but it's also one of the biggest upside stocks I hold in terms of just like, you want to talk about insane gains the next 5 years. If they get through this next, few quarters and they flip this baby to profitability, I mean, the upside potential in the stock is absolutely astronomical. And so it's a very tough situation with me in regards to Fubo. But at the end of the day, I'll tell you this. Can I buy more Fubo or can I not? The answer is I cannot buy more Fubo. And as bad as it hurts me to say that, I just can't. I own 30,000 shares of stock. I'm taking too big of a risk already in regards to Fubo. I have almost $97,000 invested in the stock. So personally, I can't buy more shares. I'm just going to hold what I got to hold. And hopefully I'll look back someday and be like, damn, I should have been buying more Fubo. That's a much better situation than me continue to plow money into this one and things don't work out, right? So, but in regards to Fubo, it's been a very impressive kind of starting to get things on the right track. They got a lot of work still to do there in regards to Fubo, right? No, I saw this was interesting, and I thought I just need to cover this in my video today, right? Because this is in the Patreon. Somebody left a comment and says, "Hey Jeremy, thank you for sharing your moves. I just started and bought your last move. Should I buy the other stocks by the end of the year as well, or should I not do that?" Things like that, right? Because obviously in the Patreon portfolio, I post all the moves I'm making in there, right? And I said, do whatever you want to do with your money. I'm not a financial advisor or money manager. You are yours. I just post some moves I'm making in the Patreon portfolio here. Have a nice weekend as well. And that's the bottom line. I'm not a financial advisor. Like, I can't tell you guys what to do. You do whatever the flip you want to do with your money. One of the beautiful things about stock picking is building out portfolios that you love of stocks that you love and you believe in for the long term. So whenever I show my portfolios and things like that and what I'm up to, it's mainly just like educating everybody. Like, this is how I run a portfolio. Somebody that's been doing this for a long time, 15 years now at this point in time, right? This is how I build up a portfolio. It's how I diversify my portfolio, my funds around, right? And so that's my stance on that. Someday I will be a hedge fund manager and I'll go that route. I'm probably still about 5 years away from that, to be honest. The thing I'm waiting on in regards to kind of my next move in regards to hedge fund is right now I have like 5-year returns on the public account. I need my 10-year returns. So if you didn't know, I have two motives with the public account, right? The public account's my big dog portfolio that I built from nothing. Started that about 5 or 6 years ago, and now that portfolio is at about $1.8 million in the private group, right? The first main motive with starting that is show everybody like how to build a successful portfolio, exactly how I do it, right? It's great to see that. But the kind of like secret motive behind that is so I have a portfolio that's all done through Fidelity Investments. Fidelity Investment tracks the returns each year and everything like that. And then I'm going to be able to show exactly I won't personally do it, but my salespeople will do it when I start my hedge fund someday, of exactly my returns versus the market, everything in detail. And now I've even set it up so I can hedge right inside the portfolio too. So over this next 5 years, I'm also going to do hedging inside the portfolio. So they'll be able to show high net worth individuals, this just isn't the returns he's getting. This is how he's managed stocks that didn't go well, stocks that did well. Plus, this is how he's managed to hedge his portfolio as well, right? So, yeah, I don't think a lot of people have kind of realized the game of chess I'm playing there. But, someday I'm going to go that route, but that's not today. I can tell you that much. And so right now, I'm just trying to help out as many people as possible and show people the moves I'm up to in the market, because eventually someday this isn't, this whole YouTube thing and me being able to show all this stuff, eventually I got to focus on me. And that's probably about 5 years from now. So just so you guys know about that, okay? Now, in terms of the stocks I sold, okay, first one up here, I did go ahead and I sold RH in the public account, okay? So I was sitting on about a 50+% gain in this one. And I looked at RH, and it's not a core position. It's not a stock I'm really going to be buying more shares of anytime soon in the public account. Of the order of importance of stocks I hold in the public account, RH is just not one of them, to be honest. And so I looked at RH and I said, you know what? let me cash out of this baby because I think I have a better place to put the money right now, okay? Now, I do still hold some RH shares, so it's not like I'm completely sold out. This is in an Ally account. I have like $18,000 worth of shares, and on those ones, I'm up 60% so far on. So I do hold a little bit of RH, but in terms of those shares, it just didn't make sense for me to continue to hold those when I have a much better place for the money, in my opinion, and when this isn't even in the top 5 of stocks that are important for me to keep buying, okay? The second stock that I decided to sell out of is another position that was kind of in no man's land, which is Mattel. And so that one I took like a $260 loss on, so not very much, but that one was just kind of like in no man's land as well. I like Mattel, and I'm probably going to, add this dividend account and maybe Patreon portfolio, and so I do like Mattel over the next few years. It's just in the public account, it didn't really serve a purpose when there's so many other stocks I'd rather build out right now in the public account. So, Mattel's a really, really exciting story, and so I'm very bullish on that stock. Obviously the success of the Barbie movie, I don't know if you guys have seen the numbers. Like, if you ever have time on your hands, Google the box office numbers for the Barbie movie. It's astronomically high. It's going to be one of the biggest grossing movies we've ever seen in history. Absolutely crazy. And so Mattel's got a very interesting opportunity here where, with the brands they own, to license these brands over time, to make movies around them, and kind of create a little, almost like a Disney, but without all the baggage that Disney has. And so I'm very impressed with kind of what Mattel's putting together there. I'm very excited for, kind of what they're up to and where they're going over the coming years. Now, in terms of where I put that money, where I put that money. I put that money in PayPal yesterday, right? I, bought 215 shares. And so that's where I went ahead and funded that from. I just look at PayPal, and the risk reward there is just so insane versus Mattel and RH, which I both liked. I like both those stocks. It's just the risk reward for me in that portfolio is just much more around PayPal, and it's just so darn attractive, right? Now, as of right now, I hold 13 stocks inside the public account, right? My big dog portfolio. So it feels about right. I'm going to add a hedge or two in there, likely in the next few months. So that will probably take me up to 14 positions, and maybe buy a new stock in there. So maybe that takes me to 15 to 16 positions. For a portfolio like that, 15 to 20 positions sounds about right. I'm a little light right now. I'm a little consolidated with 13 positions in there, but it's okay for now. I'll put it like that. On actually Monday, I'm going to be going through all the different positions in the public account and going through all the different risk factors with each and every one of those stocks, which I'm looking really forward to. So appreciate everybody joining me, as always, even under the weather, folks. And make sure to check out pinned comment down there if you want access to that free workshop I put together for you guys on how I find 10x stocks, or if you want to access my Patreon to see the moves I'm making in the Patreon portfolio each and every week. Much love and have a great day.